right, I guess that's this is take two. And I just want to make sure that everything is working fine. If it's working fine and looking real good in here, type it in the room. Make sure it ain't buffering. Hopefully everything's working out fine this go around. I'd like to welcome everybody to tonight's little course. Got to go through it all over again. This is the second take, y'all. I had some issues with, I guess, too high of a bit rate, but we got it together now, it looks like. Hopefully, all right. Yeah, this is live. This is very live. All right, thank you, Brandon. All right, looking good so far. All right, well, let's get into it. Everybody's read the disclaimer. I'm not giving any information in this to claim that I'm a professional trader. All right, Simon, you need to quit texting me because my phone's up loud. I got to turn it down. I can't do both at the same time, but thank you. Here we go. The information presented in this video or live stream right here is intended. Okay. Well, thank you, Simon. Let me make sure that I'm throwing my phone across the room there. This is for educational purposes only. The Rev of Crypto is not making any claim as to the income you may earn. I'm not presenting you with the opportunity to get rich. And as always, this is my favorite saying, risk warning, buying and selling and investing in Bitcoin or any other volatile market is not without risk. Do not risk more than you can afford. And I missed the word more right here, as everybody can see. But we're going to get started on this, and let's make it happen here. All right, what are candlesticks? Candlesticks are graphical representation of price movements of currency pairs over a period of time. Candlestick charts are commonly used in the cryptocurrency and forex market because it's easy to interpret compared to a line chart or bar chart. A single candlestick represents any period of time on a trading platform, depending on the time frame used. A candlestick on a daily time frame represents 1 day of price history, while a candlestick on a 15-minute time frame represents 15 minutes of price history. And so that's at any time frame that you use. You can kind of figure where you're at generally by the time frame minutes of the chart that you're using. Okay, a candlestick reflects 4 vital pieces of information: the opening price, the highest price during that specific time period, the lowest price during that specific period of time, and the closing price. A bar chart also reflects these 4 pieces of information. However, a candlestick clearly denotes the relationship between the opening and closing prices through the body and wicks. The candlestick body forms the rectangular shape between the opening price and the closing price. The body reflects the range between the opening and closing price of the currency pair on that certain period. Traditional bodies of candlesticks are colored with the black and white easily to define the market direction, and market direction can either be bullish or bearish depending on the opening and closing price. A white body indicates the closing price is higher than the opening price, which means price has increased over the period, which defines a bullish candle. A black body indicates the opposite, the closing price lower than the opening price, which means the price had a decrease over the period, which defines a bearish candle. Candlesticks make it easy to see if the price increases or decreases at the trading period. Other traders, like us, use blue and green colors instead of white for bullish and red for bearish candles instead of black. The bullish candle, the distance between closing and highest price of the candlestick, called the upper wick, is also called a upper shadow in both instances of Forex or cryptocurrency, in which we're going to call it a wick, which I like to refer to. The distance between the opening and the lowest price of the candlestick is also referred to as the lower wick, also called the lower shadow. In a bearish candle, the distance between the opening and highest price of the candlestick is called the upper wick, while the distance between the closing and lowest price is also called the lower wick. Candlestick bodies and wicks can be long, short, or actually nothing at all, in which we'll get into later on. It might just have a wick, and which, like I said, we'll be talking about here shortly. Wicks are very important because it's the community's rejection or acceptance to a certain price level. Once again, them wicks are very important as to rejection or acceptance of a certain price level. Some candlesticks have perfectly equal length upper and lower wicks, while others have a very long upper wick but a very short lower wick, and some have the opposite. A relatively long upper wick indicates strong rejection of higher prices above the closing price in the case of the bullish candle, or the same is true for the longer wicks, indicating strong rejection of lower prices. Wicks also indicates profit taking and unwinding of orders from the institutional traders. Everybody's seeing everything okay right here, right now? I mean, there ain't no lagging. Let's see. Let me check everything, make sure everything's going here, because it's I don't want nobody lagging out on me. Looks clean there. Says the stream's good. Good to go, Rev. Okay. Anybody got any questions so far? Anybody have any questions as far as what the different bullish candle and the bearish candle is? Okay. So we're going to soldier on then. At whatever you do, these candles are very important. At whatever strategy or method you use to trade the crypto market with candlesticks charts, you're always looking at the price and price patterns. Once again, you're always looking at price and price patterns. Familiarize yourself with the different candlestick patterns, people. Its behavior will greatly enhance any system or strategy. Reading candlestick patterns alone could provide you information as to where the market direction is going. And you're really going to realize this here when we start digging in a little bit deeper. All right, here we go. All right, long periods. Everybody see how long them candles are? Them candles are telling a real big story right here. This type of candle usually occurs when the market is extremely volatile. It has extreme volatility, I should say. It indicates a very strong buying pressure in the case of a bullish long period, or a strong selling pressure in the case of a bearish long period. Traders with huge orders are heavily participating in only one direction of the market during the trading period. Everybody noticed the other week when the CME come on to the scene with the futures trading, and right out the gate there was a great big old long bearish long period that dropped out of the sky. And we've seen it time and time again over the last couple of weeks, you know, when it starts to climb. You've seen these long periods up here. So always familiarize yourself with these, because these are very important candles right here as well. Typically the wicks at either side of the candle are relatively short, showing that the market is heavily imbalanced. Okay, and let me highlight this. As you can tell right here, you know, it's short there and it's short at the top, a little long here on the bottom, and a little long here at the top. So make sure these wicks pay a real importance on how you go about doing things here. All right, now we're going to talk about the short period. The short period is basically the same thing, except for they're not as volatile as the long. They're just indecisive. And same holds true for the wicks, as you can tell right here. All right, we got 15 of these to go through. All right. A Marubozu, and I have a hard time saying that name, type candlestick has no wicks at either ends, representing a strong buying and selling pressure. And you can see that they don't have nothing. And you see these all the time as well. They're just not there. And I'm going to show you a chart now with it. Okay, a bearish Marubozu also has a long body with no lower or upper wicks. The opening price was equal to the high price, and the closing price was equal to the low price, which means the sellers are in full control of the market during the entire trading period. A bearish Marubozu starts at the continuation of a bearish trend after a retractment or a pullback, or starts a bearish reversal. So whenever you see this right here, you see it's been down, and when it got to this area right here, it started a reversal to go back up, and then all of a sudden, booyah! This indicator right here that don't have no wick at either end starts its decline to a reversal in the bearish area right here. So you can see it just went down, and then it tried to recover right here, and then, you know, history goes on from there. All right, now we're going to talk about the spinning tops. Spinning tops have a longer wick than their bodies. Okay, the opening and close price of the candles are very close together, which means the market didn't really increase or decrease at the end of the trading period. Whether the bulls or the bearish, the market direction is significantly, since the spinning tops simply indicate the market indecisions. So they can't tell which way that they want to go, up or down. They don't know if they want to go up with it, being bullish, or they don't know whether to go bearish with it, going down. So it was, and you see them quite a bit on any chart that you read too. So I mean, it tells a story, people. These things will get you where you can enter the market, or get ready to start going short on the market, I mean, it's you got to pay attention to these indicators. It's unlike reading any other chart. Okay, let me explain this for a minute. You can look at charts all day long. Some of you know how to read charts, and then there's others that what others don't know about the market, and you're guessing. Which we're gonna do a class on this. I think I'm gonna do it tomorrow about where to enter the market at, why you people are losing money, and get you thought. I got a system that I want everybody to try because you're new, and I promise if you follow the system and get used to using it, you can make some money, but you got to have the mindset to do it. But you got to have a system for it, folks. And I'll get sidetracked on this if I keep going, because I just heard so many people the last few days that it's drove me insane. So I'm gonna come up and with a little course tomorrow night to give y'all a little bit better knowledge on how to take the emotion out of the trade and everything. Because you got to have a system, and you got to know how to position your sizing. You got to have that psychology. So I'm going to give y'all a way to adopt a system that you can, if you apply it right, you'll make money. You can't win every one of them, but you can limit your losses, and that's what I want to give you. So. But it's a real neat system, and I'm going to share that with y'all tomorrow. But anyway, let's keep going on here. Now we're going to talk about the Doji or the pin. These are really neat candlesticks right here. All right, here we go. Reverend for President. I appreciate that, guys. I'm looking at chat and trying to look at my notes and everything up here, but let's talk about the Doji. And there's different kind of Doji. You got the long-legged indecision, the dragonfly, which indicates the market reversal might happen there, and the good old gravestone, and the four price. And this is one we'll talk about last. All right, Doji stick candles had the same or almost the same opening and close prices or their bodies are extremely short. Okay, you see the short bodies right here. All right, so depending on where the opening and closing price are in relation to the candlestick's range, the Doji candle represents or tend to show market indecisions. The bulls aren't winning and the bears aren't winning. The market is in a state of stalemate. Okay, it's like a tug of war. They don't know whether they want to pull the other team across, or the other team don't know if they want to pull the other side across. Dojis are often found at the end of a trend move or during the times of consolidation where there is little buying or selling momentum. Okay, you've heard Naeem, says that there's a channel forming where the trade is moving like in a sideways movement. Okay, and that is considered a consolidation. Okay, so these pins right here, or dojis, they call them pins in Forex. We call them dojis over here. They tend to tell that story. Okay, we're going to talk about the long-legged doji, which is this little character right here. A long-legged doji has an upper and lower wicks indicating long upper and lower wicks indicating that the price fluctuates on both sides during the course of the trading period. Eventually, the trade period ends with the close price retracting back to the opening price. This type of doji indicates market indecision. Neither the buyers nor sellers were able to dominate the market, or eventually, which essentially resulted in a draw, so to speak. Okay, so this tug of war team and this tug of war team couldn't get across the line here, so they couldn't build no pattern on no body to say, hey, we won the war. Okay, so that was the case on it. A dragonfly doji is a bullish pin, so to speak. It has a long wick with no or very short upper wick. So you can have a wick up here at the top, but it'll be really, really small. You know, it'll just be just above it, looking like a, well, it could be up around in this area right here, but it's not going to be real stretched out. Okay. The opening high and close prices are almost equal. This type of doji indicates that all price activity during the entire trading period was on the low side of the opening price. Okay. This pattern often signals a bearish trend reversal. Okay, a bearish trend reversal. Contrary to a dragonfly doji, is the gravestone doji has a long upper wick with no or very short lower wick. The opening prices are equal or almost equal to the low price, and it indicates all price activity during the entire trading period was on the upper side of the opening price. This pattern often signals a bullish trend reversal. Okay, so when you see this one right here, which is the bullish side of it, okay, that means that it's fixing to go whoosh, straight down. When you see this gravestone right there, that means that the bears just got buried and we're going to see a swing up. Okay, you get that? This means the market's going to flip and go down. This means that the market's going to flip and go up. Last but not least is the four price doji, and it rarely occurs in the market, wherein the open, close, high, and low prices are the same. This only happens when trading is suspended for the trading period. So you're only going to see that if trading is stopped. And the last one that you saw, if you were on Cryptopia the other day when it suspended trading, it had that pin right there. So the next one we're going to talk about now is the hammer. Okay. Them are hammers. You see them quite a bit too. A hammer is a candlestick that has a long lower wick that is about 2 or 3 times as long as the real body, and with little or no wick on the top side. The real body is at the upper end of the candle trading range. A hammer only occurs in a downtrend. Okay, and coming up next, you'll see a chart. A hammer only occurs in a downtrend. Okay, on this chart, the market was trending downward. As you can see here, it was trending downward. But the bearish strength was stalled by the by the hammer candle. Okay, you see that right there? It was stalled by that little old deal right there. Okay. The long lower wick of the handle indicates that the sellers forcefully pushed the prices lower. However, the buyers put a lot of orders with a huge volume, overcoming the very strong selling pressure. Okay. The buyers rejected it and closed the market very near the opening price. The downward trend eventually reversed, going back up. So keep your eye on that hammer. I'll let you go back and look at it one more time. The hammer. All right, the inverted hammer. Similar to the hammer, an inverted hammer occurs at the bottom of a downtrend, and the handle indicates a trend reversal. It has a long upper wick that is about 2 or 3 times longer as its real body, with little or no wick. Okay, you compare the two. It's about 2 to 3 times bigger. So that's an inverted hammer. The inverted candle must be a bull candle and preceded by a bear candle. Okay, so you can see here, this candle here, it has to look just exactly like this, y'all. All right. Its upper long wick implies that the buyers tried to bid higher prices, but the selling pressure was too strong and rejected higher prices. Sellers were able to pull the price back. However, the buyers had absorbed some of the sale into orders and managed to close above the opening price. This pattern indicates a trend reversal depending on the type of candle that's next to it. So we don't know what it is. It could be bearish or it could be bullish. All right, this is a hanging man. And you can see the hanging man is right at the resistance. Right at the resistance level. Okay. And I think I got a slide out of range here, but we're just gonna go on. I'll just talk through it. That hanging man, that's when it just touches the resistance level and it forms right there. Okay. The hammer and the hanging man are visibly identical but have absolutely the opposite meanings depending on the price action that preceded it. Similar to the hammer, a hanging man has a long lower wick, as you can see right here, and it's about 2 or 3 as long as its real body. So it's quite long there, okay, with little or no upper wick. Although the candle can either be bullish or bearish, a bearish candle adds more weight to its interpretation. The hanging man is a, hold on. No, go back here, get on the right deal. A hanging man is a bullish reversal pattern depending on the market condition around it. On the chart, the hanging man formed near the resistance level, which I showed you right here. And it indicates that a huge number of sellers are now coming into the market. And you can tell by the way these candles right here, these bearish candles, are real long. You know, that's the weight of it. So it's pushing it down. Okay, that means that, you know, there's a lot of orders coming in. So whenever you see the long candles, you know, like this one right here, the long period, you remember I said the very first one, the long period, That's where that's at. So now the huge number of sellers are now coming to the market and beginning to outnumber the buyers. The sellers push the price lower, erasing 28 hours of bullish gains. You seen the hours over here that, you know, the bears were running, the bulls were running up the hill, and now the bears want to run it back down the hill, so they're taking profit on it. Okay. However, buyers immediately push the price back up. The candle closes the bearish price, showing that the buyers are still outnumbering the sellers. The next candle opened and captured immediately selling and closed bearish. You see where it is? It closed bearish. This is the nice one right here. Give me 1 second to take a drink here. Hoping this is providing value to everybody, understanding the candles. If this is providing value to you, type yes in the chat room, please. If this is providing value to you, type yes in the chat room. There we go. Now we're starting to see it. Well, I hope so. I hope everybody be sure to check out in the description down below this video that that you check out Sniper's Tube. We're a pretty good sized community over there. The Discord link is in the description as well. Sniper's Tube, where we're kind of the opening show for Sniper's Tube. He usually goes live around midnight or shortly after, and we have all kinds of talk. But you can catch me over there on the Discord channel over there in the Rev's Corner. I shoot straight from the hip, and I come at you really really straightforward. So I hope everybody's enjoyed this, and I hope everybody's down there in the Discord channel right now having a good understanding of this. And once again, we'll be doing little seminar classes every day. But tomorrow, I want everybody in here tomorrow. Be sure not to miss this stream coming out tomorrow night. We're going to go at 9 o'clock tomorrow night, folks. 9 p.m. Eastern tomorrow night. You don't want to miss tomorrow night, because I'm going to take a lot of things that's just going to spin your head and get you to see where you can make some money in cryptocurrency. If you're tired of losing, and you're not going to win every time, and but I'm going to spin this on you right now. Let me just go ahead and spit this out there right now. How would you like to take? Who all's been to a casino? Who's all been to a casino? Type yes in the chat room. Type yes in the chat room. And answering the question, yes, this PowerPoint will be available, but it won't be in a PowerPoint. It will be in a form of a PDF, and I'll make that available to everybody. Yes, this will be up there after tomorrow night. You'll be able to come back and watch it and get a lot of information out of it, and we'll be talking about it in Rev's voice chat tomorrow night as well, the upcoming thing. But if you ever been to a casino, and the house always wins, okay? Well, I'm going to give you a strategy, and it's going to blow you away, folks. I promise it'll blow you away. I'm going to give you a strategy because everybody needs a strategy that is trading in any kind of market. You got to have a strategy. But I'm going to give you a strategy that puts the odds in your favor every single time. How about that? You want odds in your favor every single time going into a trade knowing that you're not going to win every one of them. But what if you have a better chance at winning every one of them? How would that be? Put more money in your pocket. Don't work harder, work smarter. I'm going to give you that tomorrow night. You be here tomorrow night, and I'm going to make sure that I'm going to make sure that you get that training. So let's go on with this. Shooting star. The shooting star looks identical to the inverted hammer, but it occurs during a uptrend. This pattern is a bearish reversal sign with an upper long wick and is 2 or 3 times as long as the body and may have either a very short or no wick. The candle can be either bullish or bearish, but a bearish handle has more weight on the upcoming reversal. So this is telling you, old shooting star. You ever made a wish upon a star, seen a shooting star come out of the sky? That baby's fixing to go whoosh, just like that. On the illustration, a bearish shooting star pattern formed at the top of an uptrend. The pattern indicates that the buyers initially pushed the market higher, but the sellers came in near the high up here. Okay, they come in at the top and pulled the prices back down to the bottom and closed. Okay, they pushed it past up here and then they pushed it down. Okay, this means that the buyers attempt to push the prices up, but the sellers have more powerful and absorb the buyers. So they started up here and pushed it back down, which consumed this candle. Okay, so when you see that, it's fixing to be a reversal signal right here. See it? A reversal signal. All right. On some of my charts, y'all have some of my charts, and you see bullish engulfing and bearish engulfings. These tell a big story. Once again, these tell a big story. They tell that a trend reversal is about to happen. Pay attention. Okay, an engulfing candle forms a pattern when the candle's real body completely engulfs the preceding candlestick body. Okay, the pattern consists of 2 candles. You got to have 2 candles in order for this to happen, and you'll see it every time just like this. Okay, right here, this candle engulfs this one because look how big it is. Okay, right here, this candle engulfs this one. All right, that signals that a trend reversal is coming. See how it happens over here on the chart? A bullish engulfing pattern is a bullish reversal signal. It forms when a bearish candle A, remember, is succeeded engulfed by a larger bullish candle, which was candle B. Let's go back and look. See, candle A, candle B. A bearish engulfing pattern is a bearish reversal signal that forms when a bullish candle A, remember, and candle B is engulfed by the the larger bearish candle. So if you look here at the chart, we start down right here and we get down here. That means that you see them two candles every single time, folks. Every single time you see them candles, one followed by the other, depending on which way you're looking at it. This one is a bullish engulfing, shooting the trend back up. It means it's going to climb back up. Gets to the top up here and comes back down. Tries to gain a little bit more momentum, and boom, right here, the bearish engulfing happens again. All right. Now it swap rolls there, but it's still larger than this one right here, and it engulfed it. Means that it's fixing to go down. Looky here, what are them two right there? This is a little homework assignment for you right here, right now, before we go any further. And we only got 4 more things to do here. 4 more candles to look at. Looking at them two right here, and when I come into chat here in a little bit, because we're going to be in Rev's corner chatting about these signals. What does that tell you right there? What does them two dojis tell you? Write it down. Let me know. All right. Harami, or inside bar, also known as the inside bar. The Harami, also called the inside bar, is the opposite of an engulfing pattern. It's a trend reversal pattern that consists of 2 candles. Candles A and B, with the body of the candle B be completely inside the body of candle A. Okay? That means it's not, it matches. You can put this inside there, or you can put this one inside this one. All right? That's what that's meaning. Which way is it going? Okay. Downtrend. Bullish Harami ended the retractment and resumed the uptrend. Boom. It met the bearish Harami, reversed the uptrend, and shot it back down. That's all it's saying, folks. On my chart, and I recommend this for everybody until you get the hang of it, but I have these names on my chart. Every chart that you get from me, and if you're on TradingView, you can get the script that has that, and I'll get you looking for that script if you're on TradingView, and it will tell you what's happening right there. It's going to tell you. It names these candlesticks. Okay, we've got some things going on. I appreciate Brandon Ledbetter. Let me do this for you too, Brandon. I forgot to give you mod, but I got to get the rest of them mod powers as too. So Brandon Ledbetter is now the mod of the room here. Sorry about that. Okay, I'll get you the script during the after we're done here. We only got a few more slides to go. Any questions so far? Write them down. We'll answer them. We'll answer them in the chat process here on Thursday night. The Rev at 9 o'clock. But I'm going to be giving another class tomorrow night that'll start at 9 o'clock if you can make it. If not, be sure to watch it later. Everybody, be sure to like and share this channel. Share it with your friends that ain't got a clue what's going on. Study this stuff. And like I said, I'm going to provide a PDF for everybody that comes in and wants the PDF. I'll pin it up in Rev's Corner chat room. And you're just gonna have to give me a minute here at the end of the show here to to facilitate all that. But and everybody will have a copy of this exact same thing that I'm talking about here, and it had the pictures in it, the whole 9 yards. I want to make sure that's what we're about at Snipers Tube community on Discord. We're about helping people. You know, y'all hear me get upset from time to time in the rooms because, you know, people will just come in there and they don't want to do the work, I call it. You know, they'll come in, well, what do you think about this, Reb? What do you think about that, Reb? Have you done any research? No. Well, what the hell does it matter what I think? It's what you need to be doing. What do you think? I want to answer people's questions, okay? I want to answer people's questions about how they should be doing things, you know. Ask them this. Let me change that. I want to answer everybody's questions, but when you come in there and you ain't done no homework, then that just bothers me. That bothers me a lot because that's telling me one thing, that you're searching. And we're going to go over this tomorrow night. We're going to take a lot of emotions out of things. Guys, I want y'all to be able to take that in. But if I can make you guys, if you want to treat it like gambling, I'm going to put the odds in your favor tomorrow night. You do not want to miss tomorrow night, folks. Promise. Do not want to miss it. Because I'm going to give you a trading system. And ain't none of you, I guarantee it. If you got a trading system right now, tell me you got a trading system in chat. Yeah, I'll mod you up. Hold on. We'll give you my privileges this go around. There you go. How about that? Now, I ain't going to give everybody mods here, so y'all can just get off of it. Nah. But if y'all got a trading system, let me know. You got a trading system, okay? I'm gonna be interested in hearing this, okay? Put money in, and I hope I don't lose it. T-Bro 727, I want to talk to you in the channel, and we're going to talk a little bit about the trading system tonight, y'all. I promise. We're going to talk about it. And but tomorrow night, you got to be here. You don't want to miss it, because I'm going to put the power in your hands. In your hands, folks. You can use this system. I promise you, you ain't going to win them all, but you're going to balance it, okay? You're going to put the odds in your favor, okay? Because, look, it ain't all about you ain't got to be right all the time. You just need to be right 2% of the time. Take that one into consideration, okay? You ain't got to be right all the time, and you ain't got to be greedy. Right now, I see some of y'all just throwing in your money and hoping to hell that you don't lose. There's a better way, guys. I'm telling you, there's a better way to do things. And when you see that tomorrow night, and we'll talk about it a little bit tonight in chat, and I think it'll pump you up. I think you're going to look at it and say, "Wow, Rev's right. I got a chance here." Because right now you're pissing away money, and you're rolling the dice, and you ain't got a clue. Okay. Well, I can tell you right now, there's a lot more to it, but all you got to do is put the odds in your favor. Somebody tell me what you think your odds against what kind of odds the casino has of taking your money. Somebody tell me that in chat when we get in there. All right, let's wrap these things up right here. All right, we only got a few more to go. Here we go. Coming to, let me get in the right screen here. Coming to the piercing candle. All right, a piercing candle is a bullish reversal signal. A piercing pattern is a bullish reversal signal. The piercing candle is a bullish reversal signal that occurs in an established downtrend. It consists of two candles, candle A and B, where A is a bearish candle and B is a bullish candle. The price opens of candle B may be equal or below candles A closing price. Okay, higher highs, lower lows. Okay, the price of candle B must be equal or above the midpoint of the candle A's body. Okay, at the midpoint of candle A, but not above the open price of candle A. So it's going to meet in the middle right here, but it can't be no higher than right here. Okay, it's going to be a little bit lower over here, but it's going to meet in the middle. Okay, that's a piercing candle, which is a bullish reversal signal. This is called the dark cloud cover. The dark cloud cover is a bearish reversal pattern. The dark cloud cover is a bearish reversal pattern that forms in an established uptrend. Okay. So we see this right here. Guess what's fixing to happen, y'all? Taking off, going down. All right. It consists of two candles, A and B, where candle A is a bullish candle, as we clearly see right here. All right. And candle B, which is the bearish candle, which we see right here. Okay. The open price of candle B may be equal or above the candle A's closing price. Okay. So it can be equal to or below candle A's closing price. I mean, I had it wrong up here. I'm looking at it backwards, y'all. Bear with me. So the close price of the candle B must be equal or below the midpoint of candle A's body. Candle B pierces at the midpoint of candle A, but not below the open price of candle A. So this is the opening, that's the close. So as you see, it's in the middle right here. So it's piercing it. What do you think this one's going to be? This is the morning star and evening star. Okay, we're going to talk about two of them. First one we're going to look at is very important. Pay attention right here. Very important, people. As Naeem would do. I'm doing like Naeem does. Anyways, this is very important right here, and I can't stress this morning star, because this is patterns that you need to see. This is patterns you need to be able to pick out a reversal. Okay, these are going to tell you stories. You need to be looking at these right here because of one thing. If you see something down, you're looking to where your next entry point is. What happens if you pick the wrong candle to set an entry point in, or you set it down here and you trigger it, and you're thinking it's going to go up and it goes down? What are you going to do? You're going to be, oh shit. That's what you're going to be. You need to be studying these, because I can tell you what, this is not like looking at a chart with lines above and lines below. This tells the story. Now, we don't know which way it's going to go, but I guarantee if you see these right here, it's going to tell a story. It's going to tell you what it's going to do. Okay? Chances are we always correct? Not all the time, but generally if we see these, it might be for just a brief second. So, I mean, you got to be ready now. Okay? Everything ain't perfect as it always is, okay? As it may seem to be. All right, let's talk about the morning star. It's a bullish reversal pattern that happens during a downtrend. So it gets down here and it's fixing to do what? It must satisfy all the following conditions to be valid morning star bullish reversal pattern. Candle A must be bearish. It's got to be bearish during an established downtrend. Candle B can be bearish or bullish. So this could be a red instead of a green, okay? It must have a short body though, or a doji, indicating indecision in the market. This is just indecision right here, okay? The third candle must be a bullish candle. It must have a green, as we call it in the crypto world. It must close at the midpoint or above the midpoint of candles A body. So this has got to close above this area right here or mostly above it, okay? Candle A body must confirm that the trend reversal is in play. If candle C closed between the midpoint and open price of a candle A, okay, so it opened at the same. It opened at the same right there. The candle next to candle C must be bullish and close above candles A's open. All right. That's the morning star. It means it's the sun's coming up. That's the sun coming up. I'll say it again. That's the sun coming up. When you see a morning star, remember this one ain't got to be, don't fool yourself, this one ain't got to be green. It can be red. But that means that the sun's coming up. All right. Now here is the evening star. Here's the evening star. An evening star is the opposite of the morning star. So what does that mean? It means that it's a bearish reversal pattern. Evening star, sun going down, sun going down, sun going down. Anyways, it must satisfy all the conditions to be valid to be a evening star bearish reversal pattern. So just like the opposite, these candles got to be the same, except for when you see this, and this ain't got to be, it can be, candle B can either be a red or a green, spin the top, as I heard somebody say in the room, but it can be red or green. Does not have to be green, but it has to set up in this order right here. It will set up in this order, okay? Meaning that the sun's going to go down. That means that the the bears are in control. So it's just the opposite of the morning star, y'all. Candle A must be a bullish candle. It's got to be a bullish candle during an established uptrend. It means it had to be in an uptrend, which you see here. These blue, by the way, when y'all see these blue stars, they're just not drawn out, but they would be candles red or whatever. But you know, it's in an uptrend. Candle B, once again, ain't got to be red, and it must have a short body or a doji. Remember what the dojis are, indicating indecision in the market. The third candle, here we go, must be bearish candle. Okay, must be a bearish candle. It must close at the top, the midpoint, or below the midpoint of candle A. Okay, it can't go over the top. It's going to close somewhere in this area right here before it gets to here. All right. Must close. All right. It open here. This is the close at the bottom. If candle C closed between the midpoint and open point price of candle A, the candle next to candle C must be bearish and closes below candle A's opening. So there you go on 15 very important patterns to know about candles and cryptocurrency, forex currency, or whatever. As always, understanding what the candlestick patterns are communicating to you is the most important thing we need to know about trading cryptocurrency, people. However, trading just candlestick patterns with or without additional indicator is a very elementary way of understanding the market. You really need to understand the order flow behind the patterns and should consider the market conditions to trade these patterns profitably, to make it profitable for yourself. Okay, you got to get that down. That's the reason why I'm here, trying to help y'all to understand what will make you guys profitable. And if you don't take a look at these things, guys, you're pissing away money. You're crap shooting. But once again, tomorrow night we're gonna be talking about a system for you guys to use, document. Who in here has a trading journal? Who in here keeps a trading journal? How long have you been trading? And since you've been trading, do you use a trading journal? Type yes if you have a trading journal. Brandon, don't tempt me, boy. All right, who uses a trading journal in chat, in the Discord? Anybody use a trading journal? If you don't use a trading journal, you're hurting yourself. All right, good job, Campbell L. I'm glad you used one, dude. Chase Avalon, yes, good. If you don't use that, nope, portfolio does not count. Wow, I'm surprised. People that don't use a trading journal, how do you keep up with your wins and losses? You're kidding me. Well, I'll be bringing that up in the chat there, Brendan. If you don't use a trading journal, you're really in bad shape, y'all. Seriously. And we're going to talk about all these things. We're going to factor in all these things at the chat here as soon as we wrap up this video here in a little bit. If you don't use a trading journal, wow, man, that just blows me away. Well, we're going to talk about that amongst other things, and we're going to talk about things that I'm going to be teaching tomorrow night. How many is going to be here tomorrow night? Who wants to know how to put the market in favor of you? Who's tired of putting emotions in? Would you rather trade with emotions or logic? Let's put it to you that way. Do you want to trade with emotions or you want to trade with logic? Because I'm going to show you a way that, you know, some of these guys, there you go. Yeah, bring me a beer too. I'm gonna tell you a way. I'm reading chats. That's why there was a brief pause there. I'm gonna bring you guys a way to better. Let me pull this around here to better help yourself gain an advantage. You logic, yes sir. I see everybody wants logic. Well, right now, everybody in here, not keeping a journal, two, not putting emotions into trades, and not trading with logic. I bet you do, Garrett. I bet you do listen to emotions. I'm going to show y'all how to be profitable. I want everybody to be profitable. Okay? I want everybody to be profitable. Seriously, folks, I'm going to say it one more time. I want everybody to be profitable in trading. Now, we're not going to win every single time. We can't. None of us will. None of us will win every single time. Okay? Everybody says, oh, well, it's 50-50. Okay, well, I'm going to show you 50-50. I'm going to show you 50-50 tomorrow night. I'm going to show you 50-50 tomorrow night, and I'm going to put a trading system in your brain tomorrow night. That 50-50 stuff, y'all just going to be so loving me tomorrow night, I promise. And we're going to do these every single day, unless I say otherwise, but we'll do something every single day. And I want everybody to be sure to check out Sniper's Tube tonight. I don't know what time he's going live, but I'm sure it'll be a good show tonight. And I'm gonna try to lead up to him every night. You know, give y'all something to think about. You know, if you want to be a profitable trader, you won't miss tomorrow night because it's gonna blow you away. I'm gonna take all the risk out of you. I'm gonna give you a system that's gonna give you the confidence, and if you stick to it, you'll be profitable. If you stick to it, you'll be profitable, and it's not hard. Can't be greedy, okay? Can't be greedy at all. But I want the two. If we go back, and I mentioned in early part of the stream here that I wanted to know what them two Dojis were, and I want somebody to give me what the odds are of being the casino being the house money. How much money are they making over you? Be sure to check out everything, and I appreciate my mods in here. Brendan did an excellent job. Tomorrow night, 9 p.m. Eastern, we'll be right here. But you can catch us over here at the Rev's Corner in live voice chat right now. It's open to everybody. And the Rev's Corner's chat be wide open. We'll be over there waiting for everybody. Be sure to like, subscribe if you're not subscribed to the video. Be sure to set that little bell button down there. Tomorrow night, you'll see the Rev's face live. I'm just letting y'all soak all this in. We're gonna get really serious after a while. Hope y'all enjoyed it. I'm the Rev of Crypto, Bob Riley. I'll catch you later. We'll see you over in chat. Peace.